Good morning, everyone, and welcome to the European crossover webinar. We did see the flash PMI come in 46.6, so pretty much in line. No real response here. We've already seen the indices already pop up quite a bit. We've got the Dow futures, they're right at 38%. We've had the S&Ps come up to just about 31.15, almost there. We're kind of holding up here. We might get one more pop up in here, but the dollar, I mean, not the dollar, but the euro dollar already taken a dip back, and we've had Lagarde's speech was pretty much a bit of a vanilla speech, just talking about macro situations and what the global economy is dealing with. She was speaking in Germany, so the thought was that she probably wasn't going to, what they called earlier was hostile territory as far as looking at negative rates and things like that, that she probably wasn't going to come out pushing that way, although there's been some talk about potentially her dropping some hints in that direction. But overall, like I said, we're actually seeing the euro push to lows now here, new lows here in the euro. Bit surprised. I mean, the data's come out pretty good. We did make that pop up into the upper 10, almost 10, upper 1080s, but so far nothing here. And it's been a relatively quiet session, but it's been like that overall for FX throughout the entire week. Even the dollar index is really not moving very much here. For those of you in the chat room, Stelios had actually posted a Reuters story in regards to the currency markets, kind of being in a stale place. So may want to go and take a look at that. It's a little bit, if you scroll up into the chat area, a little bit higher there. The other pairs, let's say we're just kind of sitting here, just kind of minding our own business, not doing a whole lot here. Let's take a look here. Let's see here. Let's go on and see what we have on the economic calendar. Now, we do have Mexican data coming out at 6 a.m. Eastern. 6 a.m. Central Standard Time, 7 a.m. Eastern. And we also have Canadian retail sales now. They're going to come out at 8:30 Eastern. And then we do have market flash PMI US at 9:45 Eastern. Then that's going to be PMI flash. And we do have University of Michigan, but that's final sentiment. Final sentiment here. They'll come in, and that's going to be at 10 a.m. Eastern. Still, like I said, relatively quiet session overall. Bear with me. And we're seeing the futures come in pairing a bit here on indice futures. So let's go and move in and take a quick look at the news. Okay, just took a quick few pips out of the YM. So anyway, dollar slips as Chinese comments marginally boost risk appetite. The dollar was marginally down on Friday, and risk appetite boosted by statements from China and the need to find a resolution to the tit-for-tat war with the U.S., raising hopes that the Phase 1 deal could be reached. Chinese President Xi Jinping said Beijing wants to work out a deal with Washington that has been trying to avoid a trade war, but it's not afraid to retaliate when necessary. Senior Chinese diplomat urged the U.S. to compromise in order to develop stable relationships between the countries, but after a week of mixed signals over the likelihood of a preliminary trade deal, the developments did little to move the markets. Currencies continue to trade in a very tight range. Against the backs currencies, the dollar index was down less than 1/10, breaking its 3-day streak of gains and heading for the smallest weekly change since the start of August this year. And as I said, we're just not really seeing any real movement here. Swiss franc was down 0.2, both against the dollar and the euro, suggesting the market optimism as the Swiss franc is perceived as a safe haven currency. But the Japanese yen also seen as a safe haven. The trade in exposed New Zealand dollar and Swedish crowns were both up 2/10 against the US dollar, and MFUFG currency analyst Lee Hardman wrote in a note that the low volatility and tight trading ranges are currently the characteristics of the FX market. German third quarter GDP released earlier this morning held no surprises, showing that the export state spending and consumers helped the German economy avoid a recession. Up to now, the slowdown in Germany has been both concentrated in the manufacturing sector. ForexAnalytix associate at RBC Capital Markets wrote in a note to clients, unless global uncertainties are lifted, which are weighing down the manufacturing sector, it's only a question of when, not if the weakness in manufacturing spreads to the rest of the economy, she wrote. Well, let's go on and move into the analysis, because I tell you what, it has been relatively quiet in FX. We're going to move into the euro. Let's take a look here. Okay, it says the euro, after taking out the highs for the week, slid as equities weakened, finding support just before the bias chart support of 1058. Support on Friday is going to be 1027 with resistance at 1095. Well, I mean, I was thinking we might get a little bit of a turnaround here in the euro, and we're just simply not seeing it this time. And the risk is, as I mentioned, we can still press this thing a little bit further. And so our bias chart support is going to be 1027. Go and mark that up. Bear with me. So we're looking at 1027 for support. And resistance, well, we're giving it the benefit of the doubt, but it certainly doesn't look that way. It's heading that way, although we did actually get a rebound up here to about, as I mentioned, the upper 1080s. But our resistance today is 1095. Looks like we topped out at around 1088, 80, something right there, in the upper 80s. Bear with me. And let's go move into the cable. Well, no change in the cable from yesterday. We're still hanging around this area. We've talked about that throughout the week. This huge, big, major pivot, and we'll pull this back. You can see this 2980 goes back almost a year and a half. You can see the significance of this 2980, and we just don't have any change here. Earlier in the week, I thought that we might be able to push past this 2980 and make a move to 3050, but you can see we're just kind of holding here now. I don't think it as much as the cable weakening as we're just seeing dollar strength here at this point. And we'll close out the week, and you have a little bit from yesterday, almost like a little bit of a Greystone doji. And it's close. I mean, we've come close to challenging 2980 yesterday, and we're kind of holding steady here. Well, resistance is going to go and remain 2980, but on the downside, well, we're looking for 2868, but I think we have to give it a little bit more room here for today's bias chart support. And let's come back in here. Potentially, if we do go on and slide back, I tell you what, it's not too far away. Yeah, that's where we came up with that 2868, but I think we can potentially work a little bit lower at what we're seeing here with the dollar. And if we do go on and see this hit some stops here in the cable, we're looking right there at 2855. 2855 for today's bias chart support. And let's go and move in now to the Aussie dollar. Well, we've been throughout the week and you've seen us stuck. We've drifted, but we're just trapped. And I pointed this out earlier in the week. We're basically just stuck in this tight trading range. And it's just a range essentially, that's it, between 67.72 and 68.56 with no real changes there. I mean, that's it. That's where we're buffeted in within these two levels here. We've seen a little bit of drifting. You can see here, down, up, mildly down, up, down, down. We're kind of holding steady. We're not really moving anywhere in this Aussie at all. So no changes here. The bottom, and we're making a push towards the bottom, but the bottom in this range is 67.72, and this upside certainly doesn't look like it's in jeopardy. At least the upside is 68.56. So no changes there. Let's go and move into the Kiwi. So it says the Kiwi maintains an upside drift, and you can clearly see that. I mean, it's just a drift, nothing more than that, just an upside drift. Resistance is 64.66, and bias chart support is going to be 63.31. So really no changes there, and you can see how tight the ranges are. I mean, as I mentioned, Stelios posted that Reuters article about how we're just not seeing any movement in FX, and certainly that is the case. Let's go on and move into the dollar CAD. Well, the dollar CAD has reached the initial target, and that was, the 33. Originally, what we're looking for at the beginning of the week was 33.03 or 33.06. Support on the pullback comes in at 32.30. Resistance will be 33.03. So we're giving a little bit more. We're still holding it relatively well here, but we're actually giving a little bit more in case we do decide to pare back. May not be the case, but we're actually putting the bias chart support for today all the way down to 32.30. Might seem a little bit low, but at least you know if you try and come in what your risk level is. On the upside, resistance is going to be that target level, which was 33.03, and we're not even that far away from it. So that'll be resistance 33.03 on dollar CAD. And let's go move into the dollar peso. So the dollar peso paired back on Thursday with the potential for further dips into Friday. Support is going to be 19.30 with resistance at 19.48. And certainly we've seen this market is just kind of like an up and down. We talked about this 1923.6, and once the market broke, we actually sat there for 2.5 weeks, sitting below here, not being able to do anything. We broke up higher, and then we quickly gave back and slipped below 1923.6, and then made a move up in here, took out the highs, and now we're kind of drifting back. And why I think there's a potential for us to still continue a drift lower here in the morning. And so we're looking, as I mentioned, and you can see this coming across here for support. It's going to be right there. It's going to be 19.30 on the downside for bias chart support. And resistance, we're actually giving it some room if we get a little bit of struggle in equities. And actually it's going to be 1948. We actually have 1943, but we're giving it a little bit extra room. So it's going to be 1948 on the upside for the bias chart resistance. So we're paring that resistance back a bit. And as I said, for the most part with these FX pairs, we're simply not seeing any volatility, so there's not a whole big change in analysis. Let's go on and move into the dollar yen. Now, this has been a bit of a surprise. I mentioned I'm surprised we haven't dipped down sub 108 when we were seeing the volatility in the equities markets, considering how it looked like it was open for a pretty good little move down here. But let's go on and move into the dollar yen. So the dollar yen has clearly shifted momentum with the eyes on deeper levels, but so far has not come to fruition though. Support is 802, followed by 775. Resistance is 862. Well, we come up here just about that tag, that 862. We came up to actually 869. So we actually have today's price chart. Might have to give it a little bit more room only because we just haven't gone to the downside very much, but it's actually just right here at this level. So it's going to be, and we'll put it there, it's going to be 876. But the support's we're gonna go and keep the support here on the dollar, and it's gonna be 805. So despite being as low as it is, if we probably not going to see it today, but at least that's what we'll be looking for. And with that, we'll move into the cash dollar index. Well, you can see how dead we've been here in the dollar index. I mean, there's just, as I said, this is the tightest range we've seen in quite a while. But then again, we're seeing this the same across FX. I mean, it's just the way the FX has been. There's just simply no movement here in FX for now, and you can see how tight the range has been here. There's been no change. I've had 98. We actually started out the week with 97, 95, I believe it is, but we moved it to 98 for the last couple of days. Well, it's going to be for the third day in a row. It's going to be 98. And on the downside, we're looking for 97.51. So really no changes here. We'll actually call it, so we had it 97, 98. So we'll stick with that, or we'll just call it right there, 98 even. If we got above it, we could punch up to the previous high from about 3 weeks ago, which was 98.11, a rebound high. But like I said, we're just not seeing that much change in movement here in FX. With that, we're going to move into the cross rates. Well, look at the Kiwi yen. I mean, this thing is just simply, look at that. We're just simply not moving. Look at this. This is just unbelievable how tight this range is. There's just no movement. So needless to say, the buy chart resistance and support from yesterday is still the same for today, which is going to be 68.89 on the downside. And on the upside, it's going to be 70.48. And that almost seems a bit of a stretch up in here, 70.48, but, you know, it's not even take much to just test the most recent highs of the last 3 weeks. That's how tight we are here. So we're about 35 ticks away from the recent highs of the overall last 3 weeks. So a real break would actually, the resistance would come in at, as I mentioned, 70.48, with support at 68.89. Let's go and take a look at how we stand here with the euro yen. Well, you can see here, it looks like we certainly want to go and take a dip lower. There's just not a whole lot. Same thing here. We're just so tight in FX. Look at this range. I think we mentioned it yesterday. Look how tight this range is. So 1986. So it's essentially been trading an 80 pip range for the entire week. And really that's even giving it a bit of a stretch. That's just trying to pull the extreme here. Yeah, about an 80 pip range for the entire week. And it's just this used to be a pretty good high flyer. I mean, look at just this range here. You got in one day, you've got more than 80 pips right there. And we've got 80 pips for the entire week. So needless to say, no changes here with the euro yen. The downside is going to be 1970 with the upside of 2088. And with that, we'll move into the euro odd. Well, I mean, the only thing we can say about the euro odd is that at least we have a little bit of an upside bent. But once again, same thing. Look at the tight ranges. The range yesterday was 30 pips, 30-some pips. Looks like 38 pips yesterday. So the upside still remains the same. We're looking at 63.41. We do have a little bit of an upside bent to it, but that's about the only thing you can say about this. And on the downside, we have a 62.09. And that seems like a long ways away, although we're trading at a very tight range. Let me see, we can, yeah, there's a 62.09 if we push it a little bit lower. I mean, you could almost say you're looking at probably worst case scenario 62.26. But once again, like I said, very, very tight range here, very tight range. We're going to move into the Euro Kiwi. And the only thing you can say is it's a bit of a down drift from the, when we had this, from the apex. You can see here where we fell back and we kind of challenged this apex level here. And we were stuck there all last week, and prior to last week. We dropped down to a new level and we're just stuck. And we're trading in essentially a 70 tick range all week long, 75 tick range. And yesterday was even very quiet. Needless to say, I'm not telling you anything you don't see or don't know probably already, but on the downside, we're looking for 71.64 for support here in the Euro Kiwi, and the upside is limited to 73.56. 73.56. Let's go and move into the Aussie yen. Well, it almost seems like no matter what pair you look at, they're all the same thing. Look at this, just very, very tight ranges. We're just, I don't know what's going to take it to, push us out of these ranges, but we're just simply not moving. This even seems worse than the other ones. Let me see, 74.05. Well, 50 pip range yesterday. So basically trading 50 pip ranges for the last few days. Take a look on the downside. Well, we're looking at 73.42, and we've actually moved this up right there. So 73.42, that actually held a low yesterday. That's the same from yesterday, 73.42. And on the upside, well, 74.42 seems a bit of a stretch, but that's coming in right here. You can see right there. Right there, 74.42. and it comes right across these lows here. So it's going to be 74.42 on the upside. No changes there. And with that, we're going to move into the guppy. Well, we've been holding around this 140 area here, and you can see here, we've been just sitting here literally for almost a month. I mean, at least a good 3 weeks. Look, there's 1 week, that's 2 weeks, that's, yeah, for about a month. For about a month. If you look in here, this takes us back to right there. Well, there you go. October 17th here. And today's November 21st, look. So for a month, we've been sitting in this range here. Just no movement here. Now, what we have for our bias chart support is 39.68 with the upside at 40.63. 39.68 with upside at 40.63. Obviously, you can see yourself also very, very tight ranges. And we'll move on to the sterling odd. Well, the one thing about the sterling odd is we're still holding fairly close to this level. And we talked about this actually from the prior week, because we said if we could get a daily close above 90.58, and we can take a look at this on a weekly chart, it would open the door for a move to 94.07. There we go. So if we can get a close, you can see the significance of 90.58. If we can get a close above 90.58, opens the door for a move right there, 94.07, right there. But we've got to get that close above 90.58. The good news is, well, so to speak, is that we're holding there. It won't take much to get above this, and we know the weakness we've been seeing in the Aussie dollar. Although that being said, we're looking at two gravestone dojis. That has probably a little bit more to do with the weakness we had, and we're showing a little bit today in sterling. But the downside, once again, is going to be 88.63. So we're still a little ways away from that. And the upside resistance is still 90.58. With that, we're going to move into the other markets. We did go and see the S&Ps turn around. They actually made this move back up here to 30.15. We actually saw this move. It actually emanated or began in Asia. We were trading relatively quiet, and then what happened was the White House said that they don't know if Trump will sign the Hong Kong bill or not. And that actually sparked the indices higher. And then we saw the markets pare back a bit. But then as we came into Europe, we saw the indices go back on the bid. So basically, it's just the levels we're going. We've made a move in pretty decent, respectable move, 31.15. And we closed yesterday just a bit under that 31.05, which opened the door for us to move lower. And we were stuck there as it came into Asia. And then, as I mentioned, they got a bid when the White House said that they weren't sure that Trump, they did not know whether Trump had decided whether to sign the Hong Kong bill or not. We have seen gold take a steady move up in here, here in the XAU. Resistance here is going to come here, and the gold is back to this old level, which is going to be right there about, if you're looking at these futures, it's going to come in right there at 14.75. For sure, we're about $5 away, but we do have some resistance here. As far as crude oil, we're still holding up pretty steady here in crude oil. And I mentioned it yesterday, I think it was Dominic who had a flag that was pointing to a potential move to 59. So maybe we're going to get it, especially with the way indices are holding up overall today. We have gone and seen rates fall back a bit, but we're actually moving a little bit higher in rates now. Not higher in rates, but actually lower in rates. We're seeing bond futures make a move here as equity prices weaken a bit here. So we're actually seeing bonds on their highs right now, the 30-year bond at 160.05. The low is 59.15. If you watched the FX Daily Roundup yesterday, I said that that was a very good support level, 59.15, with a great volume level, I think at 59.13, 59.12, I believe. But that held on here, and we're actually, at this point now, we've rallied nearly three quarters of a point in there. So it looks like there might be a little bit of concern. We were actually sitting lower, and now that the equities have moved higher, boy, the bonds have really taken a pop up. See, and we've already seen this market move, at least in the Dow Jones futures. They've actually come right up here to the 38%. And we've taken a little bit of a dip back, but we've seen a pretty good little run overall. We're paring back a bit. S&Ps, which came up to nearly 31.15, are now at 31.08, and they're starting to give those gains back a bit here. Going back to FX again, on the main page, we'll continue to see the euro come under pressure here. Right there. So once again, we're looking potentially for this market to get down to 10.27. That's going to be bias chart support. Dollar CAD holding overall steady. Cable still under pressure, and the dollar index is pushing a little bit higher here at 98.03. We have resistance at 98. They could maybe make a run up to 98.11. That's the high, rebound high from 3 weeks ago. But other than that, that's about all we've got here. Once again, there's not really a whole lot happening here in FX. As I mentioned, as we move into the States, we do have Canadian data. That's going to be the Canadian retail sales. And then we do have market services flash PMI at 9:45 Eastern, and final figures on University of Michigan at 10 a.m. Eastern. And thanks for joining us here on the European Crossover Webinar.